Welcome to the Daily Update Podcast, where I'll go over the action in the market for Thursday, October 30th, and we'll see how things look for Friday, October 31st. The S&P 500 closed down 0.99%, settling near the 5822 level, just above the daily S2 pivot point on above average volume. The S&P 500 opened lower, beneath S1 at 5868, staged a brief recovery toward the 5875 resistance area, and then succumbed to late-day selling pressure. Mega caps did not lead on Thursday. Meta plunged 11.3% after reporting earnings. Microsoft declined 2.9%, while Alphabet, Google's parent, was the lone bright spot, up 2.5%. Broader market weakness was evident. Small and mid caps also underperformed, and growth underperformed value and is continuing to do so on a short-term basis. Looking at the big picture for the S&P, the short-term positive conviction has now evaporated. Intermediate-term overbought extremes have been fully worked off. Critically, however, the S&P remains above its 20, 50, and 200-day moving averages, preserving the uptrend for now. On another note, there is now a confirmed Hindenburg Omen that was triggered on October 29th. For context, clusters of this signal preceded the 2020 COVID crash and the 2022 bear market. Investors should treat this as a heightened risk flag, but not as a timing tool. Looking at the macro highlights, the 10-year Treasury yield rose to 4.09%, and we're starting to see a similar pattern after the Fed comes in and cuts rates. The dollar strength continues to build, potentially acting as a headwind for stocks. Sentiment dropped to 37, where it had been improving to 42 earlier in the week, and margin debt remains overextended above its 48-month moving average. Earnings were reported after the close by Amazon and Apple, which will help set the tone for Friday's session. Looking at the technicals, the short term remains positive, but there are signs of weakness. The Stochk RSI, Williams %R, and CCI 14 charts have all rolled over after showing us good positive short-term momentum. The S&P is currently not trending on either the short or intermediate term, with the ADX below 20, signaling a non-trending environment, which may be ideal for market-neutral strategies. In the intermediate term, all extreme readings have now been erased, and in the long term, we still remain positive, but the S&P is still more than 10% above its 200-day simple moving average, which signals possible overextension. Smart money indicators have now all switched to negative, and breadth oscillators are also confirming caution. The McClellan oscillator for both the S&P and NYSE are below zero, which is sending the summation indexes lower. The Swinland trading oscillator is negative as well. On the positive side, the parabolic SAR, vortex, and momentum for the NASDAQ 100 continue to be positive. Going through the sectors, defensive leadership emerged on Thursday, with real estate, financials, and healthcare outperforming. Discretionary, communication, and tech lagged. Growth continues to outperform value longer term, but continues to show weakness in the short term. Looking ahead to Friday, October 31st, seasonality is neutral to mildly positive for the Dow and S&P, but November 1st through the 15th have been one of the strongest 15-day stretches in market history. There are items on the economic calendar, but due to the government shutdown, they may not be released. The focus has shifted over to earnings and geopolitics, specifically U.S.-China trade talks under a potential Trump-Xi framework. In conclusion, the short-term positive momentum has now been broken, and there's a confirmed Hindenburg Omen which adds caution. Yet the long-term uptrend remains intact. Longer-term seasonality is positive, but with everybody expecting that, you can't help but ask, will that really happen? Thank you very much, and I will talk to you in the next podcast.